Great. Hi, everyone. Good evening, and thank you for joining us at this webinar session today. So before I begin, I'd like to do an audio and a visual check. So if you're able to view my slides, the full screen of my slides, and if you're able to hear my audio, please type yes in the chat. Okay, thank you. Thank you for helping to provide the confirmation. Okay, so this webinar today is brought to you by Phillip Securities CFD Department, Contracts for Difference. And the webinar topic today is for AI sector investing. It's a 1 hour session and I have more than 50 slides, so we'll start right away. Okay, first up, we'll do a review of stock market performance in 2023. So 2023 was an unusual year in that as we enter into the 2023, analysts were mostly gloomy and pessimistic about the year. So analysts were predicting that 2023 will be a slow and bad year. But as it turned out, it was one of the best years we have in recent history. So the Nasdaq turned in a spectacular performance of 43% return, whereas the S&P 500 gave us a return of 24%. The Dow Jones Index was also doing very well with a return of 13%. And across the Pacific in Japan, we have the Nikkei 225 giving us a return of 28%. This is also one of the best returning market around the world for 2023. And in another part of Asia, in India, is also giving a very good return for 2023. Both the Nifty 50 as well as the Sensex gave a return of approximately 19 to 20%. Over in Europe, the returns were a bit more mixed. The German DAX gave a performance of 20% gain, whereas the French CAC gave a 16% return. But the UK FTSE 100 only gave a return of 3.8%, which is below even the rate of inflation. And back in Singapore, the return was 4.7% for 2023, again, just on par with inflation. But the worst performing market for the year was the Chinese and Hong Kong market, giving negative return in a year where the whole world was rallying. So the Chinese CSI returned negative 11%, while the Hong Kong Hang Seng returned negative 13.8%. Okay, here is a table of the market return listing or sorting of the returns of the markets by the performance in 2023. So top of the table, we have the US Nasdaq, 43%, and then followed by Japan with a return of 28%. So Japan's return was largely brought about due to a weak Japanese yen. So it helped to boost Japanese export. And then for companies which were selling their products overseas, they were selling more, and hence this was expressed as well in the Nikkei 225. The third best performing market was the S&P 500 with a gain of 24%. And then at the bottom of the list, we have the Chinese index, negative 11, and the Hong Kong index, negative 13. This was largely due to a poor property market situation in China, also a very weak domestic demand, as well as a high youth unemployment within the Chinese economy. So a lot of weak fundamentals at the moment. Okay, now we bring our focus back to the US. In the US, there's this group of stock called the Magnificent Seven. So this comprises of 7 of the biggest big cap tech companies, which gave very spectacular returns in 2023. So combined, the returns from the Magnificent Seven contributed to 2/3 of the returns of the S&P 500. So meaning out of the 24% gains of the S&P 500, almost 16% were due to gains brought about by these 7 companies. So leading the pack, we have NVIDIA with a return of almost 240%, followed by Meta with a return of 194%. And even at the bottom of the list, we have Apple, which is giving us a return of almost 50%. So all in all, a very good year for these 7 companies. Okay, although the returns by these Mag 7 is already very impressive, there were actually other stocks that were also doing equally well or even better. So in fact, there was one stock that did even better than NVIDIA's 238%. It gave a return of 391%. Are you able to guess what stock is it? So while you make your guess, or you can type in the chat if you want to. So while you make your guess, I'll go through ranking number 5 and number 3. So number 5, we have Palantir. Okay, Palantir is a company dealing with big data analytics. Its main customer is the US government, Department of Defense, which uses Palantir's big tech analytics to do counter-terrorism analysis. And in third place, we have DraftKings. DraftKings is a sports betting company. So it provides a platform for people to do digital sports entertainment as well as betting on sports. Okay, so we will now review the top performing stock in the US for 2023, and that is Coinbase. Okay, Coinbase is the largest cryptocurrency exchange platform in the US by trading volume. And 2023 was a very good year for crypto in general, but largely because the prior year, 2022, was a very bad year. So it's more of a rebound from a very low base. But all in all, it returned almost 400% for Coinbase. Now, besides the Mag 7, there's also other tech and semiconductor stocks that did very well in 2023 that's worth a mention. So we have, for example, AMD, which is a rival to NVIDIA, or both are doing GPUs. Later, we'll talk more about both of these. And also, we have ASML making the list. ASML is a company that produces very advanced lithography machine. They are the only company in the world that produces a lithography machine that's able to produce nodes 7 nanometer and less. And also making the list, we have TSMC and Intel, both are foundries. Also Broadcom, C3 AI, as well as Adobe. Now, looking outside of stocks, we also take a look at other asset classes. Cryptocurrency did very well, with Bitcoin returning 152% and Ethereum returning 96%. It was also a rather good year for gold, a safe haven asset, as due to some uncertainty, but not excessive uncertainty during the year. Oil returned a negative loss of 10%, largely because there was a surge in oil prices back in 2022, especially during the height of the Russia-Ukraine war and during the Europe energy crisis. But then that subsided, and hence coming off a higher price point, it's reasonable for oil to register a loss for 2023. Now we take a look at the reason why 2023 turned out to be an unusually good year, despite the early gloom at the start of the year. So one of the main reasons is because through 2023, from January until December, inflation came down steadily, gradually, and progressively. So we started the year with inflation at around 5 to 7% in the US. And then by December, inflation had already dissipated to only around 2 to 3%. And with this, due to this gradual deflation going on, or disinflation that's going on, the Fed was able to slow down its pace of rate hike And eventually, they also announced that they are pausing rate hike altogether. And there was also a slowdown in the US housing market, largely because the 30-year mortgage rates were very high, and also because of tightening factors. Also, one other main reason for the US stock run in 2023 was because the anticipated US recession did not happen, although there were several times when it was quite a close call for a recession to trigger. For example, in March, there was this banking crisis with the collapse of Silicon Valley Bank as well as Signature Bank. But thankfully, the banking crisis was very well controlled, and confidence returned to the market very fast. So within 1 to 2 months of the crisis, by May of 2023, the S&P 500 was really back at the level before the crisis. So it was a V-shaped recovery. So it's almost the crisis did not happen if you look at the chart in May. Another reason for the US stock run in 2023 can be attributed to the strong US labor market, a resilient US consumer, as well as a strong US dollar. So this is also one main factor. This strong US dollar juxtaposed with a weak Japanese yen. So what happened was that in Japan, they are still maintaining negative interest rate, whereas in the US, interest rate is very high at about 5.25%. And due to this interest rate differential, global investors are able to borrow Japanese yen very cheaply and then use the money to buy into higher yielding dollar asset. So meaning what they do is they will buy Japanese yen, they'll use Japanese yen to buy US dollar investment, and then with the money that is returned, with the investment return, they will pay off the interest. So all this led to a flow of funds into US investment assets across bonds and stocks. So another reason was because throughout this year, China was not investable. There was a property crisis going on, and also because of the weak fundamentals. So it was a down year for China and Hong Kong. So in a way, it pushes investment money towards US and a bit to Europe as well. And also lastly, it's also due to this AI mania brought about by ChatGPT. It gained fervor and volume, especially during the second half of 2023. So there was an exuberance for tech stock and all things AI. So this led to another boost for the stock market in general. Okay, now we go into part 2, which is a look into US macro. So first we'll take a look at US inflation. Okay, generally US inflation can be measured using the CPI as well as the PCE. For both, the trend is almost similar. We are seeing a gradual downtrend. We started around beginning of this year. Beginning of 2023. So it was a downtrend throughout the whole year. But the latest reading from the CPI, it came in at 3.4. It's an uptick from the earlier month. So it's giving us a picture that inflation may be sticky. It's not coming down. It's not continuing the downtrend. So it seems to be plateauing out. So hopefully in the next few months, we will continue to see a continued downtrend. Otherwise, it may delay or push back the Fed's intention to cut interest rate. So the next reading will be the PCE, 26th of January. Okay, so the US Federal Reserve have been hiking interest rate beginning March of 2022. So at the first hike, it was a 0.25 hike, followed by 0.5 on the second hike. And then this escalated to a 0.75 on the third hike and continued for the fourth, fifth, and sixth hike. And then it was only on the seventh hike that is tapered back to 0.5, then 0.25, and then finally a pause in June of 2023, and then a very last hike in July of 2023. And since July, there hasn't been any further hike. So hopefully that's the very last hike for this cycle. And presently, the Fed has guided that they will probably do 3 rate cuts for 2024, but markets are anticipating or forecasting a rate cut of maybe 6 times. So at the moment, with the uptick in the CPI to 3.4, it seems that expectations are leaning more towards the Fed's guidance of a 3 rate hike at the moment, 3 rate cuts at the moment. Okay, next we look at US labor market condition. One measure is the US unemployment rate, and the last week came in at 3.7, which is a very good number because if we were to look at pre-pandemic levels, it's also around this level. So all in all, nothing concerning at the moment. There's no indication of any looming or pending recession. And in the US, if you are initially laid off, you can claim some financial assistance from the government called the initial jobless claims. And this measures the number of people submitting claims. So at the moment, also the trend is within normal range as per pre-pandemic. So there's no severe uptick yet. So at the moment, also not showing any indication of any recession. And similarly, for continued claims where people under certain condition, they can continue to claim beyond the first initial claim. So for this, there's a slight uptrend in the last few months, but all in all, not overly excessive. It's still very much within range pre-pandemic. So again, but then is leaning more towards the higher end. So maybe something to look out for. If it continue to trend up, or if there's a sharp spike, then that may be a sign of any of an looming recession. And next, we look at the number of new jobs created. The last week came in at 216,000. And this is also within range, although we see that since 1 year ago, this has came down quite a bit. So meaning what it means is that there's an easing up in the tightness of the labor market. But then overall, the overall picture is still positive. There's still new jobs created at a very healthy volume. This is another measure of the US labor market jobs opening. And we see the latest week coming at 8,790. And again, it's a downtrend, but it's a very gradual one. And also the current number is higher than pre-pandemic level. So all in all, it actually does indicate some tightness still within the labor market. So meaning jobs are taking longer to be filled, or yeah, so it's giving a picture that jobs are taking longer to be filled. Yeah. And this is also supported by the annual wage growth. The last week comes in at 5.2%, which is higher than pre-pandemic levels between 3 to 4%. So what this means is that it's giving us a picture that employers, companies are finding it harder to keep or retain or to hire. So they have to offer a higher wage in order to fill position. Or it could also be due to inflation, because presently we are in this very high inflation, still higher inflation environment. So a part of the reason for this higher wage growth versus pre-pandemic level could also be due to inflation. Because if you're a worker under this inflationary condition, you may want to request for a higher pay, to counter inflation. And similarly, for our hourly wage growth is a similar trend, a slight downturn from 1 year ago, but it hasn't fallen back to pre-pandemic level, again suggesting higher wages are needed for companies to retain or to hire workers. One reason that could explain this upward pressure on wages, right, could be due to this labor participation rate. Because if you were to look at this chart, the pre-pandemic participation rate was around 62.5 to 63 usually. But then at the moment is on the lower end of this range, around 62.5. So this suggests that people who during the pandemic they stopped looking for work. They haven't come back into the workforce yet. Because what this participation rate measures is the number of people that are employed plus the number of people of employable age who are actively looking for work over the population of employable people. Also, presently, there are some people who stopped work during the pandemic who has not yet returned to the workforce. So maybe once this remaining group of people comes back in, position will be filled faster, and then it will help to alleviate some of the wage pressure. And also because of the Federal Reserve interest rate hikes, it has also driven up the 30 years mortgage rates. So presently, the 30 years mortgage rate is around 6.8%. And a few months ago, it even reaches about 7.8%. And due to this high mortgage rate, the number of applicants for mortgages has reduced. So we see that the mortgages actually increased a lot during the height of the COVID 2021 and 2022. First part of 2022, largely because it was during these few years that people were relocating because of changes in the job demands. People were working from home, so they don't need to pay. They don't want to pay the high rent in the city, so they move out to the suburb, where they get a bigger space for the same price or maybe for lower price. And also they may do their own purchase of the house since they are going to spend a lot of time at home. So it was during 2021 and 2022, there were very high number of mortgage application, but it has since come down already to almost pre-pandemic level. And one reason for this was, also, of course, due to the high mortgage rates as well. So some people may have already took on mortgage rates when rates were lower, and some may be deferring new mortgage applications until maybe next year when interest rate are back to more normal levels. And this is also expressed in the existing home sales. We see the number of existing home sales has came down to around 3,800. And this is very much lower than pre-pandemic levels. So largely because I think due to the high mortgage rate, because if you were to buy, to do finance for a home now, it's very expensive at current mortgage rates. So it's one main consideration. And a similar trend was also observed for the new home sales, where there's a peak during 21 and 22, but it has since tapered off, and presently is also near pre-pandemic levels at around 600. Okay, next we look at US consumers. From November to December, the sentiments actually improved. So the index increased from 61.3 to 69.7. And also the surveyed consumers, when asked about their sentiments of current economic conditions, also improved from November to December. And when asked about their expectation of the outlook for the economy, similarly, the surveyed consumers also have improved reviews from 56.8 to 67.4. So all in all, there was an uptick in US consumers. But then again, if you were to pull out the chart longer, presently it's only at 69.7. And pre-pandemic level, it was hovering around 100, 95 to 100. So at the moment, US consumer sentiment hasn't fully recovered yet. largely because perhaps of all these news of looming recession. So it's bring about some restraint in their sentiments. And finally, we look at US GDP. The third quarter reading was at 4.9, which is a very unusually high surprise for most analysts. And the next week will be tomorrow, 18th of January. And market street estimate is about 1.3% for fourth quarter GDP. And that will bring the whole year GDP to about 2.4. So you can continue to check the news tomorrow to see if whether this is whether it meets the street estimate. But all in all, at the moment, again, no sign of a recession, because a recession, it has to be 2 consecutive quarters of negative growth. So looking further out into 2024, what we are expecting is a further gradual lowering of inflation. But it's usually during this last stretch that is most difficult, from current 3% to 2%. This is the most challenging stretch. But we do expect the Fed to still lower rates, interest rate regardless, largely because they feel that inflation should come back down over time, and maybe they are able to tolerate a slightly higher rate than the target 2%. And also, looking out to the end of the year, we have the US presidential election. Trump just won the Iowa caucus round with very flying colors. So most likely he will represent the Republican, and we'll probably see a Biden-Trump rematch in November, with possibly Trump winning as well. And also, some question we have for 2024 is, will there be a recession, or will we see a soft landing? I'm more leaning towards the camp of a soft landing. And other question is, will AI stocks, are they still buyable at current levels? And will AI stock momentum continue in 2024? My answer to this last question is yes, because AI revolution is something that will be around for the next few years. Okay, next we take a look at AI landscape and overview, as well as we'll do some stock pick. Okay, so this is the AI landscape. I've grouped it into these categories: chip designer, developers, foundries, lithography. Okay, so generally how the industry operates is that usually there'll be some companies that will design or develop the blueprint for the chip, but they will not be manufacturing the chip. So they will not own the lithography machine that produces the chip, but instead they will get a foundry to manufacture and produce these chips. So the foundry, they will be owning this lithography machine. Then they will be able to follow the blueprint from the designer, and then to print out or to manufacture the chip. And this foundry, they will get a lithography machine from the lithography machine manufacturer, for example, ASML. Also, less known will be Nikon and Canon, but they produce less advanced lithography machine. So the leader in this field is still ASML. So ASML may be one stock to look out for in 2024 and maybe 2025. Okay, now if you were to zoom back to the chip developer and designer, the leader in this field will be NVIDIA, followed by AMD, because it's only these two companies are able to produce AI advanced chip at the moment. So again, stock to look out for will be NVIDIA and AMD. And the companies in the top row, the 3 categories in the top row. Oh, sorry, the audio is soft. I will speak a bit closer to the mic. Okay, so the categories, the companies in the top row, they are what I call the core companies in this AI landscape. because they are the one that design and manufacture the chip, and the chip could be very broad-based. So, and thereafter, then it's disseminated downstream to the companies in the second row. So the companies in the second row are more of uh, the purchaser of the chip, right? So after they purchase the chip, then they can input it into their products, the system, and then they can come up with ways to utilize the chip or how to implement AI into their product or services. Yeah, so some of these application company will be, for example, the Max 7, excluding NVIDIA, because NVIDIA is a chip designer. And also beyond the big tech, we also have the mid and small cap tech. So these will be companies like Snowflake, Splunk, Samsara, as well as Salesforce. So all these are also companies that are at the moment pretty much they are trying to incorporate AI into their products and services. And on the right-hand side, we have the non-tech companies, meaning these companies' main business, main operation is not from tech, but they use tech in their business extensively. Or for example, Shopify or Grab for transport or ride hailing, or Airbnb for travel, Walmart supermarket, Accenture business consultancy, as well as Intuitive for robotic surgery. So all of these companies, although their main forte is not tech, but we see a lot of tech in what they do. So again, these companies are also contributing or also very much involved within the whole AI landscape. Now, which countries are leading the race for AI? So top of the list is the US. They have more than 4,600 AI startups, and they have more than 250 billion invested. And a very distant second is China, with just about 1/4 of the investment or involvement of the US. And then what is surprising is that Singapore is also on the list at number 10. So I think it goes to show that Singapore is still very competitive. Okay, now we go on to the stock pick. So our number one stock pick is NVIDIA. Okay, the reason is because NVIDIA is the core of the core of the core of AI. So there's no getting around NVIDIA. If you in AI, definitely you ideally you should be using a NVIDIA product or maybe a AMD, right? So we believe that my personal view is that NVIDIA is very well positioned to ride this wave of AI for the next few years. And NVIDIA together with AMD, they are the only two companies that dominate the GPU market. So we are talking about GPUs that are in the retail computers or in the individual computers. So for gaming or for, say, video editing, or maybe a very intensive graphic design, you need a very good GPU card. And if you were to search the ranking of GPU, you'll see the top 20, top 50. Those are all GPU cards by only NVIDIA or AMD. Or there's no, maybe occasionally you may find one Intel one, but then not very often. And then to demonstrate the difference, right, between using a GPU and not using a GPU, click on this link. Okay, so over here, this one is the RTX 4090, which is NVIDIA's current top of the line best GPU for retail computers, or the RTX 4090. Later we will mention it again. And presently it is retailing at 2,700, which is a very high price, yeah, for just one chip itself. For just one GPU. And then this is the chip inside. And okay, there's a demo here provided by NVIDIA. Okay, it shows the screen with and without the GPU, right? So you see, without the GPU, the image is darker, less detailed. The colors are less vivid. But then with the GPU, the colors are brighter, more details, sharper. And you can see all these water effects, reflection, and all. Yeah. Yeah. So all in all, this is the function of the GPU, and that is only for one frame. So imagine when the game is playing, or when the video is playing, if you're doing video editing, so it's frame by frame. So every frame has to be sharp, has to show the same color, the same kind of details in order for it not to be jaggy or distorted. So you need a very good GPU card, which is why NVIDIA is top of rank, because their GPU card is the best. So they got a very good ranking within the gaming market. And besides the retail gaming, they also are involved in the data center business. Okay, the reason is because GPUs can handle very large amount of data. And usually, for data centers, right, they will be building all these stacks of GPU. So they will not be using just one. They'll be building a whole tower of it, and several towers of it. And then what happens is that these GPUs can be combined together, can be scaled up, meaning you can actually multiply and magnify the effect. So it's already a powerful on its own, but then if you combine it into a tower, you can stack it up to a supercomputer level. And GPU are generally preferred over CPU, because CPU is more power, we call it, more power, uses more power, and also slower. And GPU, they can do parallel processing, or meaning you can give it 10 tasks. After you start task 1, you will go on to start task 2, and then start task 3, task 4, task 5, and continue and so on, without waiting for task 1 to finish. Whereas for traditional CPU, they will have to wait for task 1 to finish before they go on and start task 2, and so on and so forth. So all in all, GPU is a more powerful unit compared to the CPU. And besides the GPU, right, NVIDIA actually also produce a bit of CPU and DPU in-house. So they will combine all these in-house units together to form an ecosystem. So that is the competitive advantage and the power of the NVIDIA ecosystem. And also another advantage of NVIDIA is that they have this proprietary or in-house developed CUDA system. So CUDA, what it does is that it allows for general processing, general purpose computing to be done on GPU. So traditionally, for GPU, it's only for graphic display purpose. That's why it's called graphic processing unit. But then with this CUDA system, right, developed, now the GPU can also handle a lot of other tasks. And because GPU is a more efficient chip, so if you outsource it to GPU to handle, the overall system, overall computing will be more efficient, will run better. So presently, the CUDA ecosystem is the industry standard, but it's also very expensive. So NVIDIA's current best product for data center is the H100 chip. This one was launched in September 2022 and is currently the best-in-class chip for AI model training and large language modeling. It's very expensive. It's priced at $40,000 a piece and is in short supply. So usually when big companies, they order this H100, they will usually order a few thousands of it. So every order is a few billions or a few million to billions. And due to all this competitive advantage, right, or competitive strength, NVIDIA currently is the leader in accelerated computing as well as AI application market. And they also plan to launch a second generation of this H100 chip. They call it the H200 later this year. Now looking across to AMD. So AMD, about 7 months ago, June 2023, they announced this breakthrough with the Instinct MI300 chip. So what is so significant about this is that it's said to have 2.4 times greater memory capacity and 30 times greater compute power compared to NVIDIA's H100. And with this statistic, right, 2.4 times greater memory, 30% greater compute power, the MI300 chip may be even better than NVIDIA's H200 chip that will be launched later this year. So at the announcement, Meta, Microsoft, Oracle, OpenAI, they have already expressed interest to place order. Largely because AMD chips are usually priced lower compared to NVIDIA chips. So it will help to save a lot of money because when the order is by the thousands, meaning it will cost millions or even billions of dollars. So even with a 10% discount, they will save quite a bit of money. So the shipment of this MI300 chip is scheduled for this next few months, early 2024. But then, given this, right, I still feel that NVIDIA will continue to have an edge in this market. Firstly, because of their branding and because of their CUDA system. So if you are already an installed base customer, you already have CUDA in your system, you may not want to switch out of it, or you may want to continue to use NVIDIA chips. So they have the first mover advantage because they launch it 9 months earlier, September 2022. So they already captured some market. So NVIDIA chips should still sell well because at the moment the market is very hot. If you were to want to order H100 chip, there's a waiting list or that you have to join. So if you're in a hurry, and then plus you can buy at a lower price for supposedly better performance, then company will also consider the AMD chips. What is interesting is that on the announcement date, 13 June, when the MI300 chips were announced, we see the NVIDIA price, share price that didn't trade down. In fact, it traded up and hasn't traded down since. Or maybe on a few days it did touch, but didn't trade beyond. So what this the message that I get from this is that market is still very confident about NVIDIA's leadership in the AI application industry. So we don't see any depression of the stock price, even with this announcement of this very advanced breakthrough by AMD. And similarly, if you were to look across at the chart for AMD, we see that after the announcement, actually the price traded down. And it's quite a protracted across maybe 6 months, 5 months. It traded down. It's only until November, then there was a recovery. It could be because a market may not be confident yet, or maybe they are more confident for NVIDIA. So it's only in November, maybe just before the chips are scheduled for shipment this quarter. So there's a pickup in the confidence. So most likely AMD will begin to report revenues from these MI300 chips at their next earning. Okay, now if you were to compare the financial metrics for NVIDIA and AMD, we see that NVIDIA is a very much bigger company than AMD. It's a 1.1 trillion company, much more now because the price has gone up a bit more. Whereas for AMD is a 200 billion company. So it's 5 times difference. And also, if you were to look at the three margin measures, right? Gross margin, operating margin, as well as net margin. NVIDIA is exceed AMD's numbers. So again, this suggests that NVIDIA has better pricing control in the market, or they are able to demand that price, and customers are willing to pay the price. And PE ratio is 64 for NVIDIA and 1,000 for AMD. But this one have to take with a pinch of salt because NVIDIA, they are pricing it forward. The pricing has moved up to price forward for possibly earnings from the shipment of the MI 300. So which is not yet reflected in the earnings for this calculation. Okay, when we are talking about these chips, especially NVIDIA chips, we have to also consider US tech curbs on China and its impact. So in October 2022, US restricted NVIDIA's A100 and H100 chips to China. So A100 is the predecessor. That means like iPhone 14 and iPhone 15. So it's a predecessor to H100. So US restrict these two generation of chip to China. So, but NVIDIA being a capitalist company, right? They're revenue driven. They still want to sell to China. It's a very big market. So what they do is they tweak the specification of the chip, and then they rename it A800 and H800. So this 800 series of chip, right? They are much lower. The transfer rates are about half that of the 100 series chip. But still, the big tech companies in China, Alibaba, Baidu, Tencent, and ByteDance, they still find it okay lah, because they also got no choice. So they find okay, so they ordered, and presently they are still using this 800 series chips. But then in August 2023, when Raimondo was in China for trade talks, Huawei launched this Mate 60 Pro with a 7 nanometer chip produced from Chinese foundry SMIC. So this was a shock to the US because they didn't think that Chinese foundry can produce 7 nanometer. So what they did was that they imposed further restriction. So now even the 800 series cannot export to China. And not only that, they also expanded the restriction to the RTX 4090, which is the retail chip, the gaming for individual PC. Yeah. So again, NVIDIA being a revenue-driven company, so again, they still want to do business with China. So they again tweak the chips. Now they rename it to H20, L20, and L2. Again with lower specification. And they also tweak the 4090. Now they call it 4090D. And this will go on sales January this month. Yeah. But this time, due to this too much tweaking, now the performance is not very advanced already. So there's a lot of rejection, reluctance by Chinese tech to buy these below level chips lah. So Baidu instead then order from Huawei. The Huawei's 910B Ascend AI chips. These are currently Huawei's best in class chip. So Baidu is ordering from them. And then Alibaba, Tencent also came in to say they may not order as much from NVIDIA. And then Baidu also announced that they are developing their own Kunlun chips. So all in all, the business in China is definitely affected. So throughout the years, last 4 years, the contribution from China is about 20 to 25%. So we believe that moving forward, this percentage will continue to come down. But I think in the current next 1 to 2 years, this should still be okay because it should be absorbed by the US side. We see that in the US, there's an increasing trend, and this trend should continue to increase because in the US, there's a lot of AI companies. So, and the demand is so strong now that we believe even if the shipment to China stops, uh, the supply can be absorbed by the US market. Okay, now we look at valuation. So is Nvidia still viable at current prices? Okay, so we compare it to the pricing on beginning of 2023, 143.15, and at the end of the year, it's already at 495.22. So this is a 3.3 times increase. But then in the short 2 weeks after 31st December, that means the first 2 weeks of January, the stock price has moved up further by $51. So meaning a 10% increase within 2 weeks or just 10 trade days. So now it's a 3.8 times from beginning of last year. And I believe now the price is even higher. I think yesterday's pricing was about 560, I think. Yeah, so this is the chart for Nvidia. So you can see the steep upsurge since 2023, and it's a 3.8 times increase. But of course, this is using beginning of the year. So if we were to use this other price point instead, which is before the gap up, because I think this gap up is quite significant. It's probably an indication of people realizing the impact from AI mania on Nvidia's business. So it brought about this sudden gap up, or otherwise there's no reason to explain why there's a gap up. So on this basis, right, if we were to use the price just before the gap up, which is 305, and we measure it with the pricing now, it's actually only a 1.8 times difference. Or meaning this is the price before consideration for AI and the pricing now, including consideration for AI. But then, of course, some say this may not be accurate also because people may know that there's AI impact. So then what we do is we can take a middle price, which is the pricing in between, around 225. So even with this pricing, right, mid price and before AI mania, uh, the multiple is only about 2.4 times. And then how do we know whether this will be a good valuation or not? There's no actual accurate way lah. But then of course one way is to look at the revenue and the income. So we see that the total revenue, right, from gaming data center, they actually got two other segments. I can't recall what is it, but they got two other smaller. I think it's automotive and can't recall what's the fourth one. But all in all, they got four segments. But the total revenue is only three times. It's already three times of the third quarter last year. So meaning the latest revenue, third quarter 2024, the total revenue is three times of the total revenue 1 year ago. And we juxtapose this against the price increase, right? 2.4 times actually is still not too expensive lah. It's quite reasonable. Of course, it's not a one-to-one measurement, but it does provide some indication. Yeah, then net income, operating income is 17 times, 13 times of 1 year ago. Yeah. So another reason why we think the pricing is reasonable, not excessively expensive, is because I think that there will be price support for Nvidia, largely because this AI revolution is very impactful. It's a very permanent change for mankind. Oh, so it's almost like Windows for computer, and then or the internet or smartphone or EV, or is something that brought about a change, and there's no reversal, or it's a permanent change, or we will continue to use PC, the internet, we'll use smartphone, we will also continue to use EV eventually. And unless something better comes along, or otherwise, it's a permanent change. And AI technology is also the same thing. So it's like a Apple iPhone moment for tech. So due to this very uh, powerful technology, right? Eventually, almost all business, all industry, all companies, and all individual will start using some form of AI, or in the work or in the individual life. So there's presently at least a 6-month backlog for high-end AI chips, or the demand is very strong. So I believe the price support is there. And also because AI has broad users, or you can use it across all industry, or industrial, commercial, automotive. You can use it at home as well. Also, is even better than smartphone at a certain level, or even better than PC. Or because you can use it also for consumer electronics. Yeah, and then not only that, there's also a newest announcement. On 8th of January, NVIDIA announced three new GPU that will allow for AI to operate directly within PC or laptop, meaning you have AI localized within your very own PC or laptop. So they call this the Super series, 4060 Super, 4070 Ti Super, and 4080 Super. And also, together with the news, right, it says that Microsoft is expected to release a new version of Windows later this year, and we should be able to use these new AI chips from NVIDIA. Okay, which lead us to our second topic, Microsoft. So, what are some drivers for Microsoft stock performance this year? So, firstly, is we look at the ecosystem. So, Microsoft, as we know, they are famous for their Office suite, or their Microsoft Word, Excel, PowerPoint. They also have Microsoft Outlook, Teams, Azure Cloud, Bing, as well as LinkedIn. And then they are also a very big investor into OpenAI. So they are very close collaboration. And OpenAI is famous for ChatGPT, as well as the DALL-E image generator. So if you were to combine Microsoft with OpenAI, right, the marriage of these two organizations will lead to very close incorporation or infusion of AI across almost all of Microsoft's products. So already Microsoft has incorporated AI into the Azure cloud. They call it Azure AI, and they're also introducing AI assistant, or what they call co-pilots across most of their products. So I have an example here. I don't know whether it's visible on the screen. Probably have to. Okay. Okay. Yeah. So I hopefully can see my second screen with this preview window over here. So I'm using a Windows PC, and recently Microsoft introduced this Copilot over here within the taskbar. So if you click on this, then you will see this side panel appearing. And then it works exactly like ChatGPT. For example, just now I checked, I typed in, will Trump win the 2024 election? And then it gives me this answer. And what I find impressive is that it actually included this Iowa caucus news, which is only happening yesterday. So meaning this Microsoft Preview Copilot they are using actually very new info from the internet as well. So they're already incorporating new info from the internet. So I find this very useful. And I think what this will do is that it will change some of my habit. So I may not use Google so much. I may use more of this Microsoft Copilot more. Yeah. Okay. And then okay, back to the slides. Yeah, so the Microsoft in the latest update, I think they issued this new update about 4 days ago, version 23H2. And then with this new update, uh, yeah, they are giving us this Copilot, which is what was shown earlier, the preview Copilot, as well as this Microsoft Store. So they'll be adding in AI apps into the Microsoft Store. So again, there'll be a lot more AI stuff within Microsoft computer moving forward. So for this reason, right, because Microsoft has a very established clientele base, a lot of product portfolio and services, and then so they have already many channels, many areas where they can input AI into, and it'll be faster launch to market. They don't need to build the product from scratch, and they don't need to build the client base from scratch. Now they already have product, they already have client base. So when they input the AI, the uplift, the launch, the path to profitability, monetization should be faster. So we do expect AI income from AI to start featuring in Microsoft's financial report for maybe not for the near quarters, but eventually, because I think in yesterday or today's news, they were already charging $20 for AI, some AI access. Yeah, so you can read up more about it or regarding this Microsoft subscription service for some AI tools. Yeah, so already they are starting to monetize AI. So I believe this will begin to form one part of Microsoft's revenue in the coming quarters. Yeah, of course. This is the same news. They will be releasing a new version of Windows 12, which will be using NVIDIA's latest localized AI chips. Yeah. Yeah. So again, we do a valuation. We see that from the base to peak is about 2.8 times. If you were to take the middle price, it's about 1.4 times. Also, before AI Mania is about 1.1 time increase only. This was in 2022, way before AI Mania took hold of the market. So at the peak, it was at 340, and presently it's only trading at 388. So I believe, personally, I believe there's more up headroom for Microsoft to trade up further. And this is the revenue. Again, total revenue, actually all the metrics are showing about 1.1 to 1.2. Yeah, so which is in line, meaning this valuation is not overstretched. Although it appears very high, 388, but then even before the AI mania, markets have valued it at a very high price before. So, and now with this AI mania, is a very fundamental reason. It's a very solid, concrete source of revenue. So I believe the valuations are fair. 388. Okay. Yeah. So because we are from the CFD, so we'll take some time to talk about CFD trading. CFD is our company product, and it allows you to do long and short trades or directional long and short trades. You can do intraday trade. You can do across multiple days. So when you trade CFD, you're trading a contract and not the actual trading of shares. So what this allows you to do is you can do shorting because you're not trading the actual market, you're just trading with Philip and we are taking the opposite side. So if you do short, we are on the long side. Okay. And then you can also flexibly switch between long and short. For example, if you are short one lot and then you want to switch it to long, you just buy two, or meaning one, the first one is to close out the short, then the second one is to initiate a new long trade. So with this, you can easily switch between long and short. So that's some of the main benefits of CFD, or meaning easy short selling and the flexibility to switch across direction. Okay, and then with CFD, you can trade across multiple products, including equities and ETFs. You can also have contracts for indices, or these are our in-house indices. And then also we have contracts for commodities, oil, silver, and gold, as well as forex contracts. So these are the markets that we offer for trading. The three main US market, London, the major Asia markets, Japan, China, Hong Kong, Malaysia, Singapore, as well as Australia. And these are our 15 in-house index contract. You can check them out on our website. And we also offer 39 currency pairs across 12 different currencies. Presently, the popular ones are the dollar yen because of anticipated strengthening of the Japanese yen versus the dollar. And with CFD, you can trade them on Points Internet as well as Points mobile app. And last year, I think we launched trading on MT5 as well, MetaTrader 5. I think it was last year or maybe 2 years ago. Yeah. So to trade CFD on MetaTrader 5, because we currently have an ongoing campaign, to trade CFD on MT5, all you need to do is click on Account Management, CFD, and then MetaTrader 5. Over here, can click on this Add MetaTrader 5 account, and then you'll receive an email with more instruction on how to activate the account. You can also activate it using our mobile tree app. Just click on MT5 CFD, and then there's this disclaimer that you have to acknowledge to, and then you activate MT5 on your account. Okay, so presently, if you apply for if you're new to MetaTrader 5 and you start trading on MetaTrader 5 with an initial funding of 2,000, we will give you a $30 cash credit as a welcome bonus. So more details about this campaign is on our website. So you can check out our website at www.phillipcfd.com. And our evergreen campaign, we have this frequent trader campaign. If you trade frequently, you receive trading credits. And also we have a referral program. If you are existing CFD client and if you refer new clients to us, and if your referred friend do at least 3 trades within 2 months, then both you and your friend will receive trading credits. So yeah. Okay, and yeah, and if you wish to open an account with us, you can scan this QR code, or you can also contact us at these contact details. Yeah. Okay, and then yeah, I'll come back to this in a while. Okay, so that's all that we have for today, and this is the last slide, which is the earnings report. Oh no, actually important dates to take note of lah. So sorry, I should change the heading. Important dates to take note of. So some days will be tomorrow. Tomorrow there's an announcement on US GDP for fourth quarter. And then followed by Microsoft earnings report, 23rd of January. And then US PCE on the 26th of January. Hopefully inflation will continue to trend down. And then FOMC interest rate decision, 31st Jan. It's estimated that they will not make any rate cuts or hikes at this meeting. And then 13th February, US CPI, and 20th February, NVIDIA earnings result. Okay, so with that, let us go to Q&A. Okay. Okay. So the first question is: are there any companies in Singapore that will benefit from this AI evolution? Um, I think it's very broad-based. This AI revolution, right? So it will very much depend on individual companies, how they incorporate into their business. I think maybe the bigger companies will have better performance. For example, maybe C Limited, listed in the US, but it's a Singapore company. Uh, may be able to implement some AI into their platform. But then within Singapore, ultimately AI is a eh, productivity tool lah. By itself, it will not generate revenue. It's how you use it to add value. So no matter the size of the company actually, or where the company is, so long as if you can successfully incorporate AI in and add value to your existing product or ecosystem, then uh, you'll be able to maybe help to retain customer, or maybe get more customer, or maybe you can up your price. Oh, yeah, okay. So will UMS be benefited? Yeah, I think that is the same answer. Regardless of company, is how the company use AI to add value. Okay. Okay. Are current stock prices of Nvidia, AMD, TSMC, SML too expensive now? Okay, for Nvidia and Microsoft, I don't think so. For AMD, it will depends on the earnings result, because they have not shown any results from the sales of that is contributed from the sales of the MI300 chip. So we need to see what is the kind of difference that will be brought about, or in order to see, then project a value. Because at the moment it has traded up, but again, it could still be within valuation, because AI is I would say it's a multi-year trend. So I believe if they continue their pace of improvement on their chips, right, because it's a race between NVIDIA and AMD. So long as both companies continue to work on and come up with better and better, faster chips, then both company will run along through this race. For TSMC and ASML, okay, TSMC and ASML, they are caught up a bit in a downturn, because both of them, they don't just do AI chips. There's actually a lot of verticals within the semiconductor. So there's a vertical for automotives, there's a vertical for mobile and PC, there's a vertical for AI, and there's a vertical for industries, and of course a lot of other sub verticals. So what happens that for the PC and mobile, right, is currently in a downturn. And TSMC and ASML, they are also involved in certain production of whether is it the lithography machine, or whether is it the foundry side. They are also caught up slightly in this downturn. So it will take a while for the inventory to clear first, because right now there's excessive inventory build-up. So it will take a while for them to clear the inventory before TSMC can maybe divert more resources to AI chip, and before they will buy more advanced lithography machine from ASML. So I believe it's a whole chain of connection. So at the moment, the one that is directly benefiting are NVIDIA and AMD already. And also we are seeing a bit for Microsoft. But for TSMC and ASML, it could be a further back out story. But you will still need to watch out. It's good to have them in your watch list because we don't know when uh, this this flow will flow to them. Yeah. Okay, which company in China, Hong Kong will benefit from this AI evolution? Okay, for China, Hong Kong, right, because of this US West tech curve, lah, because it's not just US, but US together with Japan, Netherlands, and a bit of Europe. So they're all imposing this tech curve on China and of course on Hong Kong by association. So I would say the companies in China, Hong Kong may be more disadvantaged because they don't have access to the latest best-in-class chips. So at the moment, they are rushing to come up with their own chip, but it will take a while before they can catch up. So I believe at the moment, it's a bit gloomy for China, Hong Kong, I would say. Yeah. So I would not recommend any at the moment. So is current price of ARM a good entry price? Okay, ARM is mainly involved for mobile chips. At the moment, because mobile is, as I mentioned, caught in this downturn, right, for mobile and PC. So it could take a while before they clear their inventory, and then after that, then they can maybe participate more directly within this AI wave. Right. Okay, between NVIDIA and Microsoft, which one is a better pick? I would say um, NVIDIA, because NVIDIA is more directly related lah. Is the core of the core of the core. So and is the leader within this core some more. So they have a lot of pricing power, and they have the technology, and it's all proprietary. And they also got established clientele base. So I believe it's more of a valuation. Of course, we don't know what is the actual price because it's also market dependent. But then I believe Nvidia can trade to above 600 or possibly 660 before maybe uh, there may be then a point where there might be some retracement. Yeah. But Microsoft is also not too bad because Microsoft is more stable. They don't just do AI; they do a lot of other things. So all the other things they can also incorporate AI, put a subscription fee on them, and then they can increase their revenue. Okay, the valuations of China Hong Kong tech. Mm, okay, so where's the question? The valuation of China Hong Kong tech semicon AI stock are much cheaper. Would they be more attractive as they're more upside? And what's your view on Hong Kong tech companies? Yeah, so I feel that presently the advancement for China Hong Kong tech or similar stock will be slower than US. Obviously, because of all these US tech curves. So unless they can get around this, it's quite hard for them to catch up and overtake. I feel. I mean, in terms of this AI, of course, they can still continue to work on their other areas and bring in revenue from other areas. Okay, so does Intel have similar chips as NVIDIA and AMD? They are trying to also get into this AI chip development, but so far we are not seeing tangible outcomes. There's not really any good Intel chips that can uh, that is on par with NVIDIA and AMD. So at the moment, it's still a duopoly. It's still NVIDIA at the front, followed by AMD. Okay, with the valuation of Magnificent Seven and AI so stretched, how much higher can the stock price go up? What is the possibility of these prices having a correction? Um, okay, I think the valuations, right, is also a bit coming off from a low base because 2022 was a very bad year, if you recall. Most of the stock was down. Most people's portfolio registered red color lah. So coming off this low base, right, naturally the returns for 2023 will appear to be a lot. And that is before this AI mania. So if this AI mania only came into grip around maybe second half or even as late as third quarter of this year. So if you were to look, if you don't measure, I think a fairer measure would be to measure prices from at least a midpoint lah. If you don't want to measure from say the beginning of fourth quarter, at least measure it from midpoint, June of last year. So if you measure it from June of last year, actually the rise may not be so stretched. And also not all companies, because some companies they hasn't really been able, they don't have that kind of pricing power as well. So maybe they can input AI in, but their client are not willing to pay up. So you have to also measure how much of a pricing power each individual company has. So after they input AI in, can they command a higher price for the same product or the same service? So that should be the differential between whether you feel that a stock is overvalued or overstretched. But at the moment, I feel Nvidia and Microsoft are not lah. Their price level should be supported because of what they of their outlook of their uh what the earnings for the next few quarters. Okay, and then one last question is trading CFD on Phillip platform means that Phillip is the counterparty to my trade, correct? Or Phillip will find a counterparty to my trade. Okay, when you trade on Phillip CFD, yes, Phillip CFD is the counterparty to your trade. So your only risk is our company, and our company is very established. We've been around for I think almost 50 years. And we've been through many different crises, so including SARS, Lehman Brothers, COVID, subprime crisis. Oh yeah, that's Lehman. Yeah, also the Asian financial crisis. Yeah, so we've been through all these crises, and in fact, from each crisis, our company actually emerged stronger because actually we are a volume-based company lah. We don't care whether market up or down. But it's only when market up or down, then actually volume will increase. So actually it's during this periods when there's activity, then actually our company revenue goes up. Yeah, so our company is very safe. You can rest assured when you trade CFD with us, it's very safe as a counterparty. Okay, so what is your advice for those with Hong Kong, China tech exposure and portfolio still very much in the red? Yeah, unfortunately, it's hard to answer this because despite all this curve, right, the Chinese government is also trying to find ways to get around this. So there's a presently talk of them, they're going to issue 1 trillion renminbi of bonds, special bond. And with this money, they will be funding several projects. So, but then we don't know how this will impact on Hong Kong, China tech. So, Yeah, so at the moment, I can't really advise on this. Yeah. But yeah, but the Chinese government is trying to bring stability lah, to the Chinese economy. Okay, so now there's a few other questions in the chat. So can China design and produce a chip as good as the US company in the future? NVIDIA has quite a big portion of revenue from Taiwan. Who is the client? Okay, so can China design and produce a chip as good as the US? At the moment, no. I think the SMIC, they can only produce 7 nanometer, and there's suspicion on whether they can do this at scale, because it's easy to produce it's not difficult to produce 7 nanometer, but the difficult part is producing it for mass production. Because the failure rate, as you go down the nanometer, 753, right? The failure rate is higher when you produce a chip. So, for example, to produce a 7 nanometer, maybe you need to have a big percentage of chips that you cannot use. So, can they sustain the production? That is the question. So, it seems that they are able to produce 7 nanometer already. So maybe they can still counter lah, if they find a way to improve the yield. So, NVIDIA has quite a big portion of revenue from Taiwan. Who is the client? Okay, I believe it is TSMC lah, because they are the in the foundry business. TSMC is the number one lah, and they are from Taiwan. And US is okay to sell to them because they are Taiwan. Not associated with China directly. So US is allowing to sell to TSMC. So I believe that is that part of the revenue is from TSMC. So how do you see the overall Hong Kong market direction this year? At the moment, I don't see any upside yet lah. Of course, it's slowed down quite a bit, so maybe a bit of recovery is forthcoming, but and also because the Chinese government, they are probably going to put in some stimulus. The thing is, we don't know how much or how impactful that will be. So firstly, they need to restore stability to the housing market, but that itself is a very massive effort already. It will take a few years for them to really restore confidence and stability. Yeah, and then in terms of tech, actually, they don't really have that much support, I feel, because they were going through all this tech crackdown. In fact, no, they are actually destroying market confidence in their own tech stock. So the only support that I find the Chinese government giving is more for the EV side only at the moment. So maybe the EV stocks could do well, especially for BYD. But the rest of the market, I think we have to see if there's more update from the Chinese government. And what is your take on Meta and Google? Google, I find that it is slowing down, especially because Google has been in the AI since the very early. I think the 80s or 90s. If you recall, they were the one that produced the Deep Blue, the AI computer that won the world champion in international chess. So Google was the owner of DeepMind. DeepMind is a company that, Deep Blue. No, that's IBM. Sorry, Google is the owner of DeepMind, and DeepMind produces a AI program that won at Weiqi, won world champion for Weiqi. I think that was 2016, 2017. They won over two champion in the 2 years. So they also have this protein folding. They're very much into this protein folding AI for Google. That is more for the medical side, not so much for general public, because we don't do protein folding. I mean, we use ChatGPT, we use image generator, but we don't need it for protein folding. So
their focus at the moment is still very niche, and they seem to have been overtaken by all these other AI companies at the moment, Open AI. So it seems that now they are on the back seat and doing catch up instead in this field of AI, although they've been in this for quite a while. So unless they can have some kind of breakthrough, I think I would still prefer Microsoft and Nvidia. And for Meta, I think the involvement in AI is for this Llama language, which is also one of these up and coming model. But it again depends on how they are able to incorporate it into existing products, Instagram, Facebook, WhatsApp. So if you are able to incorporate AI in and charge a fee, and people are willing to pay, then I think there's upside for Meta. Oh yeah, so what is the target price for Microsoft? Microsoft presently 388. I don't have a price target for Microsoft, but I think the current price is not overstretched. So going towards 400, 420 should be okay. Yeah. Okay, I don't think you mentioned Intel. What do you think of Intel? Um, Intel is caught in this down cycle for PC and mobile. So they have to clear their inventory first because they got this stockpile that they need to clear. Then once they clear this, then it will depend on the direction. Are they going to focus more on AI, which is the current hot uh, product in the market? If so, then there's possible upside for Intel, but possibly it's more of a further back out, end of maybe second half 2024 or maybe even 2025. Yeah, so it depends on how things pan out with Intel. Yeah. Mm. Okay, I think I've answered all the questions already. If you have further question, you can contact us at these numbers, or if you wish to open account, you can also check in with us at these contact details. So my name is Sihan. You can call me Mr. Yo as well. So if any question, you can call us at 68121 555 or email into tq_team@phillip.com.sg. And that's all for this session. We have a lot more session on our Phillip website, events and webinars or events and seminar. So do check out our free webinars and seminars, and we'll see you at our next event. Thank you very much. Have a good night.